Oh, I think everyone knows that we're seeing meme stocks back in the news this week. Keith Gill, Roaring Kitty, deep expletive value on Reddit, posted a fairly sizable position over the weekend, perhaps notionally closer to $170 million, outright maybe closer to 115 in GME. And it sent the share prices surging yesterday, if only temporarily. When I last checked, we were trading a little bit lower pre-market. And I guess the question here is whether or not this is a legitimate thing that's going on, because we heard yesterday as well, Reuters reported that E-Trade under Morgan Stanley is considering dropping Keith Gill as a client because they think this is perhaps a pump and dump episode. I'm having trouble wrapping my head around that. Tom, I'm wondering what the fundamental difference is. If I'm a retail trader and I happen to have some money and I take a position in something and then I post about it online, who cares? Right? Am I a hedge fund manager going on CNBC talking my book? No, but is it basically the same thing? Yes. Why would the SEC or anyone else be up in arms when a retail trader is happening to corral a large number of market participants to ride into a position with them? Didn't this just happen a few weeks ago? Carl Icahn took a position, went on CNBC, talked it up, and then it shot up 11% after his announcement was made public.
Yep.
Why is this a problem for so many people? I don't think it should be. Now, whether or not retail traders that have not caught the initial move should chase it is a different story. Whether or not it's a gamma squeeze, it's a different story. But the mere notion that people are going after Keith Gill for talking his book, which we have entire businesses and industries built around, is complete nonsense.
It is. And I agree with you. And I actually, like I was telling Tony, I did an interview last night with an attorney for the SEC for another media outlet. And her point was exactly that. She goes, I understand your point, Tom, which is it's important for your business, it's good for engagement, he didn't do anything wrong, blah, 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 this. We don't know that, our point is to protect the customer, and we don't know that he didn't do anything wrong. It doesn't look like there's anything illegal or there's any wrongdoing here, but we don't know.
What we do know.
Right, but her point was at the SEC, we err on the side of caution. You guys are going to err on the side of your business. I mean, that's of course how it's going to work. I agree with you 1,000%, but there's also, I've been in this business long enough now, 40 some odd years, to know that you can be 100% right. The pitch is right down the middle of the plate, okay? It is literally in the heart of, it's the heart of the strike zone. They can call it a ball. And the problem is, no matter how much money you have, you cannot defend yourself. And because they have unlimited capital and nobody else does. The challenge is, crypto is a perfect example. And
I was just thinking of Michael Saylor as a corollary.
Not even Michael Saylor, but just all the crypto exchanges, and this was the whole, this was Coinbase's whole argument, Brian Armstrong and his whole case, like how wrong the SEC is about everything, but they don't care. There's so many ridiculous rules that they can take an opinion. Hey, you know what? And I don't know if Keith Gill can win if they decide to do that. The reality is, I think, for me, just looking at it from 10,000 feet, if there's anybody that's wrong here, it's threefold, and it's all on Morgan Stanley / E-Trade. Number one, they should have never leaked a story saying we're considering kicking this guy out, because that's just a bullshit PR move so that every media outlet picks up their story. That's number one.
Because how does it even come out? Even if it was an internal conversation.
No, they called up.
I know, but I'm just saying, but it was an internal conversation between me.
I know.
How does it leave those
Exactly.
calls?
So they called up and said, hey, here's a story for you.
We got Kitty and we're thinking about,
exactly.
Maybe.
Here's a story for you. So it was a PR move by Morgan Stanley. That's Bush League. If anything here, the manipulator in this case is Morgan Stanley E-Trade. It's not Roaring Kitty. That's the first thing. The second thing, why is this any different than a Morgan Stanley analyst coming out and saying something totally ridiculous?
Exactly.
Okay. And talking their own book for positions they've been accumulating, or a new IPO that they're trying to stabilize or bring to the market, whatever it is. Okay. Those are two examples. And the third thing is, which I think is really important, is how are these guys, what right do they have to confirm or deny this guy's position or even discuss his position? He's a customer. If they want to get rid of him, then get rid of him. But you have no right to talk about his stuff. Like he's protected privacy wise. Can't talk about a customer position. So I think that the rule breaker in this case on so many levels is Morgan Stanley E-Trade. I'm guessing it's more E-Trade than it is Morgan Stanley, because I'm sure Morgan Stanley doesn't even know what E-Trade's doing. That's the issue here. It has nothing to do, literally nothing to do with Keith Gill.
Yeah, and if the SEC goes after Keith Gill, I mean, I'm very much an institutional systems type of person. I believe in good governance. And I really haven't bought into the whole Main Street versus Wall Street retail versus, the hedge funds type of attitude. I just think it's a good story rather than anything legitimate. I don't think people like Ken Griffin are sitting around saying, how can we screw over mom and pop traders today? Right. But if the SEC decides to go after someone who's doing the exact same thing that every hedge fund manager that goes on Bloomberg, CNBC, Fox Business News does to talk up their book, simply because he posted it on Reddit as opposed to doing it through the proper channels of getting on network television, you're going to have more and more people think the system is right. Now, if I'm at Morgan Stanley and E-Trade, I'm absolutely terrified that this headline got out. Because why would you want the army of apes coming after you and potentially even just leaving the business, right? You want your account pulled.
They put it out.
But they did intentionally. It's dumb. It's a terrible PR move. Regardless, we can digress.
It's an idiot PR move, but they did it, and they got their name all over the place, and they got everybody talking about it because we're talking about it now. So maybe it's not that as crazy.
It's just SEO move from their marketing department, right?
Yeah,
like, how can we get our name in the headlines on Google today?
Exactly. What may come of all this is that they'll recognize that in today, a lot of the rules around what you can and can't say as an investor, were written 30, 40, and 50 years ago. Nobody's really tweaked those rules for social media. That's why, Elon got away with what Elon got away with when he talked about, deal being done, 420, done deal, that kind of thing, financing secured. And when he talked about his position, that's these are things that these are media vehicles that did not exist when these rules were written. How do you adjust the rules for Twitter, Facebook? How do you adjust the rules for Instagram and TikTok? In this case, for Reddit, that's never been addressed. This doesn't fall under the same kind of headings and categories, and also he doesn't own enough stock to require to be. Well,
that's the most interesting point. Even if you were to exercise or got assigned all of the stock through the options positions he holds, he would become their fourth largest shareholder, and he would still be below the 10% threshold to report any of these things. So who's to say that this is done, right? If the SEC says this isn't a problem, then GameStop is probably going to be in the news for a little while. Wash, rinse, repeat.
What's ridiculous about the whole thing from my perspective is this guy's obviously, what he's done is impressive, but he's obviously not a very sophisticated investor because he's all in on one stock. He's making his bet behind some crappy ass company called GameStop, which for whatever we might want to think, he's got his reasons. It's kind of everything about this is an amateurish play, except that he got away with, he played the street.
He was able to make it work.
Yeah, he was able to make it work, but it's a totally amateurish bet. I mean, he shows his colors and how naive he is about how markets work and all this kind of stuff. So I don't know. Like to me, I think there's a lot.
Tom, that may be the case, but if these numbers are true and this isn't outside money that's come in, he's turned like 50K into $450 million over the span of 4 years. He would be a generationally great trader.
Yeah, in this case,
I asked Tom that.
Yeah, I said I agreed with Tony. Yeah, that's the case. I mean, he's also $10 away from losing everything.
But you know what? If what was the old oil parable? A man walks into a bar and there's a man sitting there having a solemn drink, and he says, "What's the problem?" He goes, "Oh, I lost $20 million trading oil today." And the guy goes, "Wow, you lost $20 million trading oil today? Why didn't you just take the $20 million and go home? That's generational wealth." And the man says, "With that attitude, boy, you're never going to make $20 million." Right. And so, it's really not about the money for him. This guy is doing the thing that all traders should do. He's exceptionally dispassionate. How many of us would have taken the bag and walked away with $20 million or $40 million in 2021?
For any entrepreneur, any business, anything you do, it's never about the money. It's never.
Exactly.
It's never, ever, ever about the money. And listen, I know it sounds crazy, but the 25 in the $25 handle now. He probably paid a couple dollars in premium for those options. I mean, he's $2 away from losing it all.
I think the important lesson here, let's just say this is all real for the sake. None of this is myth. He did turn the 50K into 450 million or whatever at the max potential, profit potential. There are a lot of people out there, and I know I do this myself, where like I hit a profit level, a percentage gain in an account or a position, and then I kind of take my foot off the pedal, even if it's working. And as a trader, you kind of have to be dispassionate, right? Like if the setup's there and the conditions are still in place, push the trade. Continue to push the winner. And this guy pushes the winner. He has conquered his emotions, if this myth is true. Either way, though, I think this is really important for a few reasons: the SEC perspective and the conviction perspective. And whether or not there's any opportunity for retail traders to latch on is an entirely separate conversation. Tom, I know the last time we talked about this, you said wait 2 or 3 days to try to fade it. And that actually was pretty prudent. So I suppose we can wrap up this conversation on GME. When are you fading the move higher?
I don't have a position on in GME. My last 5 GME trades were all when the stock was down between 18.5 and 20. And all I did was sell the 15 puts or buy stock. So I've been trading GME from the long side, but only because it sold off too much and I thought it'd bounce. I didn't have anything when the stock jumped yesterday to $40 pre-market or anything. I had no positions on. Yeah, I just don't have a GME position on.